Jobless claims and housing starts data are going to hit the wires right now in about 2 seconds. Rick Santelli standing by at this in CME in Chicago. Hey, Rick.
Hi, good morning, Joe. Yes, housing starts for the month of May expected 1,350,000 seasonally adjusted. Annualized units comes in light, extremely light. 1,256,000. That is definitely well below what we were expecting, and that would be the lightest going back, well, quite a ways. We're going back to, wow, 1,256. We're going all the way back to May of 2020. May of 2020 to find a smaller number. And on the permit side, well, the permit side's on the light side as well, but not nearly to the extent of housing starts. Expecting a number on 1,420,000-ish. We end up with 1,393,000, so a bit under 1.4 million. And indeed, that would be the lightest going back to June of 2020. So these numbers are light. And there's a lot of stories to be told here. First of all, the difference, of course, between single family and multifamily. But on single family in particular, on the start side, we should have expected a weak number. Home builders, their inventory of new single family homes has been going up, up, up. And there's been a lot of warnings in terms of how that glut may be affected, of course. And on the jobless front, well, initial jobless claims coming in at 245,000, spot on with expectations. And it would have been 3,000 less than our last look, but it was revised from 248 to 250,000, which puts it back down 5,000. And it is, once again, comping to the last time we were over 250,000. You are going to the first week in October when we were a whisker under 260,000. But this has been building. As a matter of fact, if we look at initial claims right now, this would be the third week in a row it's been somewhat elevated and just a knock below 250,000, big psychological area. The counterpoint to that is if you look at the last 3 or 4 years on a chart, it really is pretty darn sideways. On continuing claims, once again, above 1.9 million, 1,945,000. That now becomes the fourth consecutive read over 1.9 million. These are comping to November of 2021. We see that interest rates, well, coming into this number, we're at 435. We're maybe a basis point or two higher in a 10. We're basically unchanged, down 3 basis points in a 2-year at 393. Maybe the big story in interest rates, obviously, on the second day of a Fed meeting is the Fed. And I will say that my own personal preference, I have no problem for higher for longer, but I would like to put a caveat out there. The Fed really doesn't seem to want to ease. If they wanted to, they could find reasons to. They could find reasons not to ease. In terms of tariffs, there's few precedents, and some of the theorizing that some Fed officials have about how the ongoing discussion of tariffs without any definitive information on tariffs might be changing expectations. I don't know. I just don't see how that logic could really hold up to major scrutiny. But nonetheless, they're the Fed. They can do as they want. And as I said, they can defend either side of the goalpost with regard to either easing or not easing, in my opinion. Joe, back to you.